Never before in history has Bitcoin pumped this hard at this stage in the cycle, and it is breaking particular models we will look at in today's video, as I need to recap some of our previous 50% models. Also looking at Ethereum punching to new fresh highs over the last 24 hours, just a few bucks away from $3,000. With Ethereum's pump, it's possible that ETH BTC is still bottoming. We haven't seen a breakdown. Let's update that in today's video, along with the S&P 500 as it stalls out at 5,000. The NASDAQ also stalling out at 17,800 points. A look at the 10-year cycle, and of course, the old like and subscribe. 28% of you haven't hit that subscribe button yet, so do that. Hit that like button as soon as you jump onto the videos. It's your home of macro cycle analysis. We cover Bitcoin, cryptocurrencies, the stock markets, and of course the real estate cycle, as we have done in the previous videos looking at the everything bubble. It is still going on, but time will tell when we get this short-term correction. All right, guys, it looks like we're getting a little popular now with a lot of trolls going on. We're probably bot trolls here. 1,000 likes on this post. Let's get this to 100 likes on the pinned comment, but just be careful of bots in the comments section that will lead you astray with 1 million subscribers telling you about some sort of bot system they have on their website. So pay particular attention to that and do not click on those links. Just wanted to give a quick shout out to that. It's most likely an absolute scam. All right, on to the macro cycle here. Dow Jones 10-year cycle. It seems like we are still in the midst of the year ending in 4. This is a really simple chart that shows what happens on the Dow Jones, which is very similar to what happens with the S&P 500 in terms of the market movement for that particular year. And the year that we are in is the year ending in 4, so 2024. So we have that extra bit of knowledge with the real estate cycle, which happens every 18 to 20 years. So years ending in 4 are going to be slightly different depending on which half of the real estate cycle we are in. Back to the 10-year cycle. If that doesn't make too much sense, of course, we continue to update that on the channel as well. The years ending in 4 are pretty much up years. You can see towards the end of the year is really where things start to pick up. And that's been the suggestion across all of the data points that we've been looking at for this stage of the year, or at least the first half. Things can be a little bit turbulent in the first half of the year, but it doesn't seem that bad so far, as the markets have been heading straight up since January. But back to the 4-year, well, the years ending in 4, essentially the main thing to look at here if we're a longer term investor is the years ending in 4 are typically up years. You can see where it opens and where it closes, it's higher priced, therefore the year is typically up. Not all the time, but typically. Okay, so on to years ending in 5. Like we said, this isn't for every single year, and we have to understand where we are in the macro cycle, our real estate and economic cycle. Essentially, this particular decade, it looks like we are in the midst of a pretty significant bull run, which basically culminates somewhere between 2026, 2027-ish, where we do get this pretty significant bear market, collapse, recession, depression. We don't know yet what it's going to be like, but with the state of the market and how fast it is rising, it's probable that we are going to see pretty significant runs up and then followed by significant corrections, probably a crash in this case because of how far things have run up. Speaking of upsides, I don't know what the media is telling everyone out there, but a reverse crash is a bull market. If you're getting a reverse crash, meaning the market is going up, it's called a bull market. Don't try and call it something else. It's just a bull market. Repeat after me. Reverse crash is a bull market. A reverse crash is a bull market. So if you start to hear this jargon talk from media or headlines telling you about a reverse crash, it's essentially a bull market, and they're trying to reason another way around how they got it so wrong for the last couple of years by trying to call for a recession and bigger crashes through 2022 and of course 2023, which was in fact a mega bull market of a year, going straight up 20, 30, 40% in many markets. And for Bitcoin, it was up about 150 odd % in that year. So a reverse crash is just a way to cover up what they have gotten wrong over the years. And I actually did a post on that on Twitter many, many months ago, looking at what the media will do moving forward into this bull market. And that was one of the things that they would do, is basically come up with any sort of other name to disguise what's actually going on. Don't be a fool. Check out what's going on. And what's going on for Bitcoin is a pretty unprecedented type of pump. Now, this is the chart that we've been looking at for many, many months now, the 50% level. And what's happened in the past is Bitcoin has hit that 50% of the bear market. So you can see here from the top to the bottom, straight through the middle is your 50%, top to the bottom, straight through at 50%. Of course, this is on log, so it's not going to look like it's dead on 50%, but hopefully you're smart enough to understand that, which I think you are. Looking forward, this is what's happened. 50% hit and a pullback, 50%, and then it's ready to go. That was the last cycle. Cycle before that, 50% pullback, and that pullback was into the halving. Then we had another crack at 50%, and it pumped from that point. This time, however, is not over yet, but I just want to continue to update this, and it may, in fact, be broken this time, as all models don't necessarily have to work out exactly the same. So that's why I'm updating it here. What we have seen is a pause at 50%. And if you want to look at it on a very, very minor sense, now I'm not trying to turn this into it being correct, because that would be curve fitting and we do not want to do that. We can see on the daily, we did have a test, a pullback, basically a breakout here, and then another pullback before a final test, but it's just far too short term for me. I would have wanted to see it on a more macro time frame, at least on a weekly chart. And in this case, what it's done in the past is on a monthly. You can see it test 50%, had a pullback, a test, and then ready to break through. Test, pullback, on that next attempt, it breaks through. This time, as I said, we've tested it. It did pull back. The next month, it had another push up and came back to the 50% level. So the 50% has been very, very trying times for Bitcoin at that 42K. So far, we've got about just under 10 days to go for February, and the market is up pretty significantly. Today, $9,100 from opening to close, and with the total bar being now $11,000. So it's an $11,000 bar, which Michael's covered on his channel, looking at previous times we've seen $11,000 bars or even bigger. It was basically back at the peaks and on that run up. So we're definitely getting into some pretty overheated territory. But in terms of the 50%, well, we need to see over the next couple of months whether this does fade out at the close. We haven't got there yet. There's still 10 more days to go for this month. Do we come underneath here and then test and then break out again later in the year, sometime lining up with the election? We'll have to wait and see. So if the market does continue to close above $42,000 over the coming months and then start to work its way higher into the all-time high, then this did not happen like it did in the previous cycles. Is this time different? That's the big question for me on this one. And obviously, I'm very wary of using the term "this time is different." I wouldn't say this time is different because there was the month of December that tested 42,000 and got rejected. Then January tested, got rejected, came back and sat on the 50%. And if February closes above these levels, that means we've got now 3 months closing at or above the 50% level. So all we're doing with the 50% level is figuring out, is the market weak at the moment or strong? So that's how we avoid the trap of saying this time is different, therefore yada yada. What it is saying is this time is stronger, not necessarily different, because it did react at the 50% level, but stronger. Then that allows us to act in certain ways moving forward for our portfolios, meaning maybe this is going to peak sooner than we had anticipated, and we should be prepared for any sort of significant pumps from that point. On top of that, we're looking at what is different from last time. So it's very important, at least the way I think, is to not get mixed up with saying this time is different, but just looking at the similarities around the cycles and the rhyming. Even though things can be different, there are similarities. Now, the similarities here are looking at the move from the low to where we currently sit. So 15 months from the low. So you can see 15 months from the low brings us out to April 2016, and then March 2020, and currently February 2024. So in terms of the move in that 15 months, the first cycle here that we're looking at is 2015. You can see that the close on that 15 months was 168% from the low, and the highest price throughout that entire stage, 15 months, was 202%. So it closed at 168%. Now the next cycle, which had that really big move up of 343% from the low, at the end of the 15th month, it closed out at 105%. So this time, if the market in the next 10 days closes at these higher prices, that's going to be a much, much bigger pump than what it had on the 2 previous cycles as well. So you can see how these markets are rhyming in a sense, but in terms of how they all differ, because at the end of the day, no cycles are exactly the same. Otherwise, it'd be all too easy and everyone would be billionaires at this point. There are similarities here, but you can see the strength in this case is a lot different to the last 2. Now, granted, 2019 did have a bigger pump throughout that 15-month period, but then it closed off a long way from that top, coming down to only being 105% up from the cycle low. If Bitcoin was to only be 105% up from the cycle low, it would have to come all the way back to roughly $32,000 from here in the next 10 days, which would equal the same as the previous cycle. In terms of 168% up from the cycle low, that's for the 2015-16 low area, 168% puts Bitcoin at, well, 41,500. So not too far off. So we've got 10 days to see whether we're going to be similar to what happened in the 2015 to 2017 cycle, which we know Bitcoin is tracking more like this cycle than it has the previous cycle. So potentially there could be that little bit of a pullback there over the next 10 days. Let's wait and see. In terms of the short term, it has been stalled. Bitcoin price has stalled now at the $52,000 level. You can see that closes are just getting very tight here. We've had a couple of days down and then a lower top form, and now another day down after the holiday in the US over the last 24 hours. I think it's Washington's birthday. So that has caused the markets just to be a little bit quieter than typically because, well, it's a holiday and that's what happens over there. Short term, however, looking to the downside, our targets are still $45,000 up to the first peaks here at about 48.5 to 49,000, which was the ETF top. You can see the market did pause ever so slightly on the way up here in 10th, 11th, 12th of February. So that could be a first area. If that breaks down, of course, I'm looking in this particular zone here for the next support levels. Now, it's all part of a healthy correction. An unhealthy correction would be coming back under the 50% of the major moves. That's from the SEC crypto drama low back down underneath roughly 39. I'm probably looking here at 38,500. You start to see Bitcoin get under that. That's an unhealthy move, and it's probably likely Bitcoin would spend more time underneath the 40K than above it over the coming months while it builds another case to get back above the $40,000 level. Do I think that's going to happen? Right now, it seems unlikely. A pullback even seems unlikely for Bitcoin, but if we do get the pullbacks, anything above these levels is safe for Bitcoin. Of course, we're still in this disbelief stage of the market just running up 1, 2, 3, 4, 5 straight months with higher highs and higher lows. And if you want to count the green months, well, add in another one here, that's 6 months. So it's a pretty significant move to the upside. Bitcoin has done that in the past and then fade off. That's what happened in 2019. You can see the move up was roughly 6 months and then basically 6 months back to the downside. Now, there's been a lot of movement to the upside, especially Ethereum hitting new fresh highs today. Now, a quick recap of the Aussie dollar pricing. Bitcoin against the AUDs just dropped off from $80,000, getting very close to a new all-time high. That's why I continue to cover this, because we're getting much closer to a new all-time high for Bitcoin against the AUD than we are the USD for now. As for Ethereum, it's still sitting at 4,500 AUD, $4,500. What can you buy in Australia for $4,500 compared to just getting 1 ETH? Let me know in the comment section. That's pretty wild. The top here is at 6,700 Aussie dollars. So getting close to the next resistance level at 48. The next one here, roughly 53, 54, like we covered yesterday. Then back to that all-time high of 6,700. Ethereum USD, 50% level, $2,900. It was a few bucks off 3,000 yesterday, and that continues to put in higher highs and higher lows. Meanwhile, Bitcoin is stalling at this price, which is possibly why we're starting to see a little bit more of that money flow through into ETH and some of the altcoins. In terms of ETH's downside, if this is to stall at the 50% level, like we're seeing with BTC, well, we've got the previous top at 2860, the previous swing bottom, which also lines up with the ETF top pump. So we just draw a nice little clean straight line. That's at $2,700 as well. So in terms of percentage moves, if this is the top to the downside, you're looking at roughly 9%. And if we can come back to the 50% level, top to bottom, now we go top down to the 50%. It's only about 14%. So we know ETH has done 28% from that top to the low before it pumped out. And this previous move from the ETF pump to the correction was 20% as well. So it's not unheard of for ETH to do that. Somewhere in the 20% would take it back to 2,300. But underneath these levels is potentially unlikely now. Underneath sort of 2,100, that brings it all the way down to 28%. Now, also on the downside, which was different to BTC, is you can see the higher lows form here at 2,100, higher low and a higher low on that ETF dump, whereas BTC, it went to a lower low compared to where it was distributing out into that bottom. So it's showing the strength to Ethereum at this stage in the market, which is also showing the strength for ETH BTC. And like we've been covering here on the channel, looking at the possibility of a good timing pretty much now at that low. We were talking about it back just a couple of days. So basically around 5.4 million Satoshis. You can now see it's up 11% against Bitcoin since that little bottom here in February 12th. And since we're looking at that flippening, 5.4%. So time to flip your Bitcoin into ETH as we wait for the cycle of ETH BTC to come to a conclusion here and then potentially work its way out, more strength back into Ethereum. As we've also covered here with the ultrasound money. Ethereum was proof of work, so you can simulate that, but they've changed that into proof of stake. Basically, Ethereum is currently deflationary, but this can change at any time. If there isn't enough demand for Ethereum, then the supply details will change and it could become inflationary again. I think this is a pretty significant case building for Ethereum at this point in time, especially after the June low. This was the point that we were looking at for ETH BTC to bottom, and with the amount of volume that came into the market at that June low, which was very, very soon after the ETH BTC top, I had suggested that this low may not have been broken in this cycle. Now, if you want to spare me a few Satoshis here and we start to see this base form, this could still be the case. Maybe ETH BTC has bottomed here. And if this is the case, well, then we would want to see ETH BTC move away relatively quickly because you've got a pretty nice double bottom in play. What about the price levels that ETH needs to overcome now in the shorter term? Well, I'm on the weekly chart here, just looking at the last several weeks, 5.6 million Satoshis. If ETH can close above that over the next 5.5, 6 days, that is going to be a little more strength to that case that this is, in fact, a double bottom forming with the USD low that happened back in June 2022. A nice little fake out to the downside, big pump coincided with the ETF pump from there. You definitely want to see that close above 5.6 million and then start to work its way higher above each previous top, swing top that is, and then of course get back above the level that I'm definitely watching in the sixes. So it was around that 6.5 to 6.8, which is the 50% level, and these previous tops and bottoms. There's your 6.5, there's the 6.8 at the 50% level. So a nice clean move away from there would, I would think, cement this as being low for ETH against BTC. Want to see those closes back above 6.8 million Satoshis. So if you are flipping your Bitcoin into ETH in the hopes of getting bigger gains, this is the risk. The risk is it's still early. There's no confirmation because it hasn't closed above those levels, but you could potentially be getting in early. Now, if you wanted to protect your position, well, then you'd put the stops underneath these swing bottoms and potentially the swing bottom here that was formed in January at roughly 4.8 million Satoshis as well. So if you saw the market break down from here, well, that means ETH is getting weaker against BTC. And of course, Bitcoin's taking the gains back from that point. Now, to cover a couple of altcoins that you guys suggested in the comment section, of course, Injective is one of the favorites out there. You are seeing higher highs, higher lows on the weekly, but it's a really slow grind up. Now, the area that you want to see it break out, of course, is the top there at 45 and some closes. But if you start to see this break down and take out these lows at roughly 30 bucks, probably looking to further downside somewhere between 23 and $28, $29 as well as another safe entry point. Before, well, let's see if we can get this next stage of that altcoin season. This is more like what you would want to see happen to Injective is the market breakout of those tops. Now, of course, you're not buying it as low as possible, but what happens if you were to buy it when you thought it was going to go up from 12 cents and then it dropped to 11.8, and then again to 10.8, and then down to 9.5, you'd feel pretty shit. And most people wouldn't be able to hold in for that type of move. Of course, that's the risk that we all play in altcoins. Maybe that's your game. You just want to keep buying on the way down in the hopes that you do see this pump. So that's the couple of different strategies that you could use for your own altcoin trading. But if you wanted to play it extremely safe and wait for those breakouts, well, that's why I use the swing indicator. You can see when it breaks out of these swing tops here. I am on the weekly chart as well, so it's more of a macro view here. And then you would look for those next major breakouts to the upside. Of course, you've got your safe points below the market as well, in case it fakes out, comes back into that range and starts to break down. Unfortunately, you got to get in to, risk it for the biscuit. But if it starts to break down back into that zone where it was trying to accumulate and then further back underneath those swing bottoms, that's time to say that your biscuit is done and you're probably only going to get a few crumbs left from it. Hopefully Bitcoin gives us a little more to work with tomorrow. It's been a very quiet day with the holiday in the US. Hit that like and subscribe. We'll be back again with you with the next fresh update. Keep an eye out on Ethereum as it continues to push to new fresh highs. And of course, that ETH BTC chart is looking relatively good at this stage. Cheers, guys. I'll see you at the next video. Till then, take care and peace out.